Good afternoon, everyone, and welcome to another edition of our monthly webinar series. Today's will be focused on access to capital, but I want to first welcome you on behalf of our President and CEO, Sharon R. Pender, of the Capital Region Minority Supply Development Council, and the MBDA operator for the Virginia Business Center located in Alexandria, where I hang my hat on a daily basis. As we've tried to do in the past, we bring in important information to help you grow and sustain your businesses, especially on this topic and access to capital. Our special guest today is from the District of Columbia, Mr. Aaron Fenwick, who I will introduce here in a moment. But Aaron, how you doing? The couple of housekeeping rules. If you can put your questions in the chat, my team, excuse me, my team will track those, and there'll be a time we can answer questions from the audience. But Mr. Fenwick's gonna share with us momentarily the things that take place at his organization. The next month, we will feature the Defense Logistics Agency. And if you're tracking, you know that this month, the month of May, is Small Business Awareness Month. A big emphasis in the first week of the month. Mayor Bowles and her team had a whole expo in DC that I was fortunate to be invited to, and it had a great turnout. And so if you missed it, I know a lot of the information was recorded, and they have it there with the team out of the DC's Small Business Office, along with the Department of Insurance, Security and Banking, that team together and put that on. So let me introduce my special guest, and as I always say that you always want to know who's talking to you. And so we were fortunate enough to start a team with Aaron's organization. And immediately I realized we needed to get him on a webinar so that we could share what is happening right at our doorsteps, because there's a lot of us that don't know. We don't know, but it's amazing we don't know is right next door, right, or right outside the door. But he's going to share with us the programs that are better known as DISB, if I pronounce the acronym right, being a military guy, but it stands for the Department of Insurance, Security and Banking out of the District of Columbia. And so he's going to share with us key things that they do out of the DC BizCAP program in order to assist businesses that are headquartered in DC or that are that work and registered in the district to work for the district. Okay, but a little bit about Aaron, so that you know who we have here. He's currently the SSBCI, and that stands for the State Small Business Credit Initiative Program Administrator for the District of Columbia, and their Small Business Capital Access Program known as BizCAP, DC BizCAP. He oversees that program where he assists entrepreneurs and small business owners in obtaining needed funding to start, grow, or sustain or expand your business through partnerships with commercial lending institutions. And he comes with 20 years plus experience throughout the DMV in the financing and program management world. He very, very active and passionate about what he does and he brings to the table. He's going to share the details, but if you're from the district, you got to know, especially if you're tracking capital, that the federal government, in an allotment of SSBCI, provided the district $62 million, if I remember the figure correctly, for this year. But if I said that wrong, he's gonna definitely correct that. But there is funding available that you should know about, and also, but we've got to be qualified for him to help us out, and he's going to share what that is. So without further ado, Aaron, I'm gonna be quiet, turn the mic over to you, share with us about yourself, a little about yourself and and your organization.
First off, Mr. Marks, thank you very much. I appreciate the introduction, but more importantly, the partnership. You guys are doing phenomenal work over here, directing our small businesses and the things that they need. And I'd love to continue to help you with that. A little bit about me. Again, my name is Aaron Fenwick. I am the State Small Business Credit Initiative Program Administrator with the District of Columbia. It's an access to capital program that's designed to support small businesses who are creditworthy, but are challenged in getting the funding that they need from traditional banking institutions. The agency I work for, the Department of Insurance, Securities and Banking, is a regulatory agency. And essentially, what they're charged with are three things. One, to cultivate a regulatory environment that protects consumers and attracts and retain financial service firms to the district. We want to empower and educate residents on financial matters, and we provide funding for district small businesses. I'm responsible for the third portion, the funding for district small businesses, as well as educating and empowering residents on financial matters. We do that through DC BizCAP. That's the name of the program that I operate. It's a business capital program, and it works very similar to the SBA, where we provide incentives for banks to approve deals that may not have been approvable. Stepping back and talking a little bit about the agency, though, aside from being a regulatory agency, we regulate insurance companies, securities firms, and banks. We also have three financially focused programs. First one being the Office of Financial Empowerment and Education. It has a focus on financial literacy for individuals. We have a student loan ombudsman that focuses on supporting folks on their student loan debt. There's a debt cancellation program or debt forgiveness program, excuse me, as well as counseling that's available. And then we have a mortgage foreclosure ombudsman that does the same thing. They provide support to individuals facing foreclosure. And then again, the DC BizCAP program. But really our goal is to help support the small businesses. We know between 2021 and last year, more than 10 million new businesses started in the nation. That's more than ever was calculated before. I want to say in like early 2022, that number was 4.5 million. And at 4.5 million, it was much greater than what has ever been calculated before. So that 10 million is huge. And with that, right, small business owners are coming to the market. They're creating products, creating jobs, building our economy, adding to the tax base, doing a lot of phenomenal things. But we got to ensure that they're getting the support that they need to grow and add to that economy. And that's what we're focused on.
Okay. So, Aaron, a couple of questions to start to kind of fuel the pipeline. Great overview. Are your services limited just to the district residents, or who can apply for your services?
Yeah, that's a very good question. So I'll give a little bit more background on the program so I can dig into that a little bit deeper. So the program was initially started back in 2010, and it was a part of the 2008 economic downturn. If you remember, jobs was a big issue. So President Obama at the time created the Jobs Act. And with the Jobs Act, I think somewhere around $4 million was dispersed to all the states. The district was allocated around 13 million of that, and we made this DC BizCAP program. The program has three sub-programs within it. One is the Innovation Finance Program. It's a venture capital-based program. that helps support small businesses by either investing directly in them or investing in venture capital companies who then invest in those individuals. So that's one, we'll park that to the side. We've got a loan participation program. I mean, what that does is it participates with lenders to support a lending request. We can fund up to $1 million, no more than 50% of the loan amount. So to give an example of that, if you needed a loan for $1 million, you go to the bank would say, okay, we're going to bring DISB in, and they would give $500,000, and we would give $500,000. I think the greatest thing about this program, though, is there's some interest subsidies for individuals that are eligible for them. The interest subsidies are basically reductions in interest for DISB's portion of it. If you meet these interest subsidies, this is what you get. You're able to have a maximum of 2% interest rate on your loan or line of credit. It can go as low as 1%, but 2% would be the max if you have that interest subsidy. I don't know if anyone's been paying attention to rates in the market today, but interest rates on mortgages are 6, 7, 8%. Realistically, interest rates on business loans today are probably going to be nearing 10%, double digits. So to have 50% of that amount to be 1, 2% will be absolutely dramatic to what the cost of that money is going to be to you, or the loan payment and the interest that you pay. But that's the loan participation program. But our most used program is called the collateral support program. And what we do is we provide collateral to businesses that don't meet the collateral requirements of traditional lenders. If any of you have went to a bank before to get a loan, whether it be for your business or a car loan or a personal loan, one of the first questions they typically will ask you is, well, what type of collateral do you have? For those who may be asking what's collateral, if you were to get a mortgage, you're buying a home, right? You found this house, it's beautiful. You go to the bank, you get a loan on the house. Well, the loan, obviously, is the loan. The collateral for that loan would be the house in itself. If the worst case scenario were to happen and you were to default on the loan or being unable to pay, the bank would take that house to cover their loss. So on a car loan, same thing. You know, for the loan, you're buying a car, the collateral will be the car in itself. You don't pay, repo man's coming. So with us, what we do, many times small businesses, specifically individuals that deal with federal and local governments, contracts, if you will, may not have a ton of collateral within their business. A lot of times you're funding working capital, you're funding payroll. Those things are not things that you can just sell so the bank gets their money back. So what we'll do is we'll provide cash collateral to deposit at that bank to cover you for the loan that you need. We can, very similarly to the loan participation that I just discussed, we can fund $1 million, no more than 50% of collateral, 50% of the loan in collateral. And I'm sorry, excuse me.
Go ahead.
Step back and actually answer your question. The question was, the question was, can the services be used in the district? Obviously, yes, they can be used in the district. I said all that to, one, give you an understanding of the program, but secondly, every state has a version of the program. The District of Columbia has a collateral support, a loan participation, and innovation finance program. Maryland has a version of the program. Virginia also has a version of the program. So you can certainly connect with any agency that's managing this program. If you've got questions about that, I can help direct you later on. But the program is designed for district small businesses. DC BizCAP, I'll say, is for district small businesses, and that needs to be approved by lease or D. Now, here's the thing. You don't have to be headquartered in the district. You can be organized in Virginia, and you have a location in the district, and you're doing work in the district. The key is you have to be registered, you have to pay taxation, and you have to have a physical location there somewhere. As long as those conditions are met, it doesn't matter where you are headquartered.
Okay. Oh, thanks very much, because that really clears that up.
Mhm.
Because sometimes you got to be a resident, or your business must be headquartered in a place.
Right, being a resident is not a requirement.
Got it. Okay, that's good information.
Mhm.
That definitely coming from the authority. So out there in Zoom land, understand that if you're working in DC, your business must be registered.
That's right.
Clearly must be registered to work in DC, which means you got a DC certification also in order to work there. And then you're actually got a physical location.
That's right.
Okay, and you can compete for that capital. Okay, all right. So Aaron, the next question is, in what ways do you support the businesses looking to expand and take on larger contracts?
Yeah.
You could talk to that.
I mean, one, I think, is incent lenders to fund them, right? Anyone who's getting a larger contract knows that you win the contract and that's not the end of the game. You know, you haven't won yet. You've got to fund the contract, have successful operations, and you got to collect your money from the government or whomever you're getting the contract from, right? So in most cases, in my history, I've seen that typically it takes about 30 days before you can bill the government for an invoice for work you've done, depending on your contract. So you got to hold 30 days worth of expenses up front. Then maybe it takes them another 30, 60, 90 days to pay you. On the long side of things, that could be 120 days before you ever saw a dollar from the work that you've been doing from the last 120 days. I don't know about you, but if I was starting out a business and I didn't have any capital and that was the expectation, I'd probably go out of business faster than I got started. If you don't have the capital. So what we can do is we can provide the capital that will incent the banks to lend to you based upon the contract that you've received. And it is not factoring. If any of you are familiar with factoring, it is not that. You will own your receivables. You will not be on contract in the sense where the length of the contract has got to come through me. And I work with 14 different lenders that work within our program. And what we would do is we would talk to you, the borrower, get an understanding of where your business is. My background is in commercial lending. I spent 20 years in the private sector doing that before I came here to the district government. So I speak the same language as lenders. And that will be my goal, is to be the middleman to make sure that your application was in the same language as the lenders. And alongside with the additional capital that I'm providing, many times that's what needs to happen to incent the lender to fund something that they may have had struggles with previously.
Definitely another good clarification, because I immediately start thinking of factoring when you were talking about, the being able to help with that contract, from a contract financing standpoint. Because we know factoring it's a tool, but it's definitely one of those, I would say, a last option.
Yes.
Type thing for a company.
I agree wholeheartedly with you, sir. I mean, there's some things about factoring. If you need the capital, it's a phenomenal option. But to the point you make, there's a lot you may give up in doing it.
Right. Okay. The next question. What are some of the challenges small businesses face when expanding or taking on larger contracts that you've seen in your experience? And how can BizCAP assist with that?
I think capacity is huge, right? In the banking world, one of the big concerns lenders have with businesses that grow, especially extremely fast, is their capacity to manage that growth. If you're a business and you got infrastructure for, $500,000 of revenue, the staff for $500,000 of revenue, that's a big difference from a business that is now growing to $20 million in revenue. And I've seen that happen depending on what type of contract vehicles you have and what type of growth. So the biggest thing is going to be is being able to articulate that you have the infrastructure to handle that to the government entity you're applying for, but then also to the lender that you may be looking for capital for. The SBA is certainly an option. DC BizCAP is an option to help grease the wheels, if you will, to the lenders to make a no a yes, right? What we do is the term I'm gonna use is mitigate, but reduce the risk associated with the lender's lending. Folks talk about credit a lot and things like that, but in small business lending, credit can hurt you, but it's not a help you scenario. What helps you is your ability to repay the debt, your business's ability to repay the debt, and they need to have that articulated clearly to them. One of two ways. It's either one, you can show that I can afford the debt based on what my business has historically done. All right. But for many folks, winning new contracts and expanding, that is not possible. Last year I did 200,000. Next year I'm going to do $1 million. That's a whole different. So, and a lender would give you funding on 200,000, which may be $20,000. It's not going to help $1 million business. We need to get you the $1 million funding that's going to help your business. So what we'd have to do is use your projections. The problem with projections is a best guess in most case scenarios. The benefit that contractors have, though, this gold, right, is that you have a physical contract. You now have something from your customer that says you're going to get paid X amount of dollars for doing this work. So that is an option that you can use. But many banks see that risky because historically I don't have it. So a lot of folks are left to factoring and things like that. We talked about that a little bit ago. What I could do is come in and say, again, provide the support that we have. If it all goes bad, Mr. Lender, we're going to take 50% of the loss for you. I'm also going to reduce the cost of this money for the borrower. So now they've got more cash flow to afford the debt. So between those scenarios, again, it's usually enough, and I'll use that terminology again, to grease that wheel and incent that lender to lend. But I'd say one of the biggest challenges that small businesses have when they're on that growth stage is the fact that now you have to handle the capacity of $1 million business when previously you were a $500,000 business. You got to make sure you put that infrastructure in place. Capital is one thing, but management is certainly another thing. Make sure you invest your time, let me say that, into a good business plan.
Hey, great information. What can MBEs expect when seeking to get access to capital, or qualifications different for all financial institutions?
I mean, they look at all the same things, right? Most lenders are held to certain federal regulations that, again, they have to abide by. But they make their decisions on different things. I work with these organizations called CDFIs, stands for Community Development Financial Institutions. They're not-for-profit organizations that fund small businesses. They fund mortgage, the mortgage landscape. They do a lot of work, but they work on a community-driven basis, if you will, driving success for the economy, things of that sort. Many times these organizations are funded by traditional banking institutions and also government entities. So like the Bank of America, when they say they put, $200 million into small business, I'm just throwing numbers out there. Many times it's done by giving money or granting money to organizations like this who then support those small businesses. So know who those folks are. We talked about credit, and I was talking about credit, and the point to that scenario is that most lenders are going to fund to you based on your ability to repay that debt. Again, like I was saying before, credit is important, but it is not the end all be all. It'll hurt you, but not help you. You have to be able to execute that you can repay the debt. That is going to be the bottom line for any lender that you talk to. Some like retail organizations better than they like contracting organizations, and vice versa. Some focus on real estate, some focus on, equipment, some focus on working capital. So there's a lot of different organizations that have different focuses, but most all of them look at the same thing, which is, can you afford to repay this debt?
Hey, so let's check the chat box, question box. Alice.
Yes, good afternoon. Thank you, Mr. Fenwick. Very good overview. We have one question. Not sure if you can address it, but if you have any information, there is an individual that's asking about information in Maryland. They basically say, can you provide information on this program in the state of Maryland? They are a Maryland business doing business in Maryland.
Yeah, so in Maryland, the SSBCI, I believe, was run through their Department of Commerce. And forgive me as I could probably look it up for you, but think about the name. But a company called TEDCO, TEDCO, has been contracted out that handles a lot of the funding in Maryland. But if you were to look at, I'm going to put it in the chat here, SSBCI, Google that. U.S. Treasury, Maryland, or whatever state that you want to, it'll pull all those details up for you and have everything. SSBCI is a federal program. They funded just about all the 50 states. On the Treasury's website, they house on the details on each individual state.
Yeah, and I can add to that. So if you're from the state of Maryland, just as Aaron said, it's actually the Maryland's small business office, which is a part of the Maryland's Department of Commerce, is the manager of the SSBCI, and they have Maryland was allocated $198 million, and they use two organizations to assist them. He mentioned one. TEDCO is the innovation arm of the state of Maryland that manages a portion of the money that the governor has allocated for innovation out of that 198 million. And then there's a private company called Meridian Management Group, run by Mr. Stanley Tucker, who works with the state to do the lending program portion of that. And you can look up Meridian Management Group, and then the state does the state office does some lending themselves. So that's for the state of Maryland. If you're from Virginia, specifically the Virginia Small Business and Supply Diversity office has an arm called the Virginia Small Business Financing Authority, and that's also Maryland's Small Business Financing Authority. Okay, is the SSBCI manager, a young lady named Cheryl Bostic, is the branch manager, and Virginia got $230 million of that allocation, and the governor has allocated that, directed that 75% of the money will go to the innovation side of the house, and that is run by the Virginia Innovation Corporation Partnership. And then out of Cheryl's office, the other 25% is for lending purposes. And the state of Virginia has a lending office, and it's broken down by 3 regions: Central, North, and Southwest. But you can find that on the website at for Virginia Small Business and Supply Diversity. And to echo what Aaron said, if you go to that, if you Google SSBCI, it will come up, and it shows every state of the union and territories and the allocations that have been made by those states. and that money is handled at the federal level through Treasury.
On the chat, I was able to add the link to the Maryland SSBCI program, which says what you said word for word on it, Mr. Marks. But then I also added the Treasury's website as well, so you can look at all the states.
Okay, Alice.
Yes, thank you so much. There is another question, a couple of questions. The next question is, if I needed a car loan, would I go through the collateral program for the car loan?
Yeah, you could, but I think what's most important is that you have a conversation with us first, right? Because part of what we do is structure things in a way that makes it hard for the lender to say no. Whatever the lender's issues would be, we're going to structure it in advance in a way that it's not going to be an issue when they see it. And we're going to get them on board with it. So while we could go to the lender and say, yeah, we think that it's going to be the collateral support program, you know, when they start digging into it, they may say, I'm more interested in the loan participation program. We just have to be prepared for that piece and ready to direct it up front. But they do have the final say.
Thank you so much, Mr. Fenwick. The next question, is there a program where small business owner do not have to use their personal property as collateral for a loan?
Yeah, that's a good question. I mean, my program kind of eliminates the need for that. I'll give you an example. I had an individual with a small business. They came to me and they needed a line of credit. They needed a large line of credit to handle the receivables, working capital with their business, really payroll type of stuff. And they had a house and they were talking to, you know, some other financing agencies or organizations, and they wanted them to use the house as collateral, but then also the receivables. We had a conversation. I said, well, tell you what, I've got cash that you can use as collateral. And rather than using your real estate, we'll just do that. And we were able to find a bank that agreed with us. So they were able to hold on to their assets. They used my cash for collateral and they got the funding they needed.
Very good. Thank you so much. The next question, actually, it's just not a question. We will get the information you're asking for in Virginia, about Virginia, inside the chat. Let me see if there are any other questions. At this time, there are no more questions. Thank you so much.
Okay. So Aaron, any tips, any other tips that you know, in your business is helping the folks out that you can share that you haven't already shared?
Yeah, what I'd say is, I mean, let's talk about just the process of getting funded, right? So I feel like there's a lot of mystery around that we should probably work to demystify, and the pathways to getting that funding. Because this program, as well as other stuff, show you there's no lack of money and funding that's available to folks. But sometimes it doesn't always get to the end user, meaning the small businesses who need that capital. So there is some sort of disconnect between the funding that's available and the pathways to get there. Many times what that is what I spoke about before, is like speaking the same language as the lender, understanding what exactly they look at when they look at a deal. And I say that's where you would want to focus your time. First and foremost, before you're ever going to ask for money from a lender, 6 months before then, you should have already built a relationship. You've been in, introduce yourself, your company, the work that you do, how you're looking to do it, potentially what you're looking to do down the road in the future. So when you're ready to go, you've already got that relationship. They know who you are. I saw a stat the other day saying that when the PPP funding came out, and don't get me lying on the actual percentage, but majority of the folks who got the funding were the very large businesses who, quite frankly, didn't need it as much. When you talk to a lot of the lenders and folks like that who are deploying the funding, well, what happened there? One of the big things that they point to is the fact that, well, folks were coming to us and we didn't know who they were. We don't have a relationship with them. We don't have a banking, we haven't ever lent to them. We don't know them from that perspective. Oddly enough, though, many of those folks had banking accounts. So I want to make a point real clear. Having a bank account is not the same as having a relationship. Bank account is a product. A credit card is a product. A relationship is where I can come down, sit and talk to you. You know who I am, vice versa. That's what you should be having with your lenders. It will surprise you the amount of difference it makes for someone to know you a little bit when you're going through these decisions. They'll fight for you a little bit more. They can better articulate what you're looking to do to their approval authorities. And again, it may just make the difference for you.
Okay.
There was one more question. I think you really expanded on it, but if there's anything else that you can add to this question. Ms. Kimberly Allen asks, any strategies you can recommend for small businesses that are still struggling to obtain financing?
Yeah, I mean, you know, all small businesses aren't the same just based upon where you are in the course of that journey, right? Are you starting up today? Are you you've been operating and maybe you're going through some challenges, or are you in a scenario where you're growing? There would be a separate answer for each one of those questions. But I think the key is when you're looking for funding is really just to have your ducks in a row. Make sure that you're financially literate. You should probably get with the organization like mine or others to talk through where you are and what your application would need to reflect. Many times it's not an overnight solution, right? The homework I'd give you today on how to improve yourself isn't something that you go home tonight and come home tomorrow with the answer. It may be 3, 4, 6 months of work and transitioning from one place to another place. But that's the key. Your financials must be in order. One of the biggest misconceptions from our accountant partners is that you want to expense everything out of your business to reduce tax liability. And that is a good strategy if your goal is just to reduce tax liability. But if your goal is to grow your business, if you knew you need to operate, maybe you want to sell your business one day, having a business that is not profitable is not the best way to do that. Because as I was saying before, when a lender looks at your loan application, they're looking at your ability to repay the debt, and they're going to look at your history. So when they pull up that tax return that says you made $1 million, but you net negative $200,000, will you have the money? Will you be able to show that you can afford this debt? The answer more than likely is no. So I think a really big key to making sure you get that piece right every year, marry the marriage between tax liability and getting the capital and growth that you need out of your company, is you should be having a conversation with your lender or banker and your accountant or CPA every year. Your accountant should be saying to your accountant, these are my goals for the future. I know I want to expand my business. I know I need this piece of equipment. I got to add two more staff to cover these contracts. You got to have the financials go along with it. What is it going to cost you? What's the financial impact? What is the profits that you'll get as a result of that? But what that'll do is that'll enable your accountant to see, well, how much money do I need to keep into the business so that you're profitable enough that when you go to the Mr. Bankman or woman, they'll be able to fund that transaction. The lender will be telling you, or the bank person will be telling you, you need to be able to show this much in profitability to afford a loan payment of this. And your CPA is the one that's going to work the magic within your financial or accountant or whomever, or if it's you, whomever it is, you've got to intimately know your business, the expenses, so you can represent it correctly when you're looking for capital.
Hey.
So the next question, Mr. Marks, I just wanted to make sure, would this session be sent to participants for future references as we try to use strategies being shared?
Yes, this is being recorded, and we have permission from Aaron to share his image. He's not going to charge me any more money than he already charged me. Yeah, this webinar, along with all the others we have presented as an organization, are on our website at www.mbda-virginia.com. We've got a YouTube link, and you can go to this web. This will be there in a few days once our production team cleans up all the stuff that I messed up, and then any other access to capital webinars we've done, you've got access to those. And yes, to answer your question. And we got a lot of stuff that's in the chat. Those links to those specific offices in Maryland that handle the SSBCI are currently in the chat now. And all the things, his links that take you to DC BizCAP are also in the chat if you hadn't seen those yet. And but you can reach out and touch us. And so, okay. And the DISB website is www.disb.dc.gov. And Claudia will make sure that everyone is seeing that. But that's how you can reach out after this is over with and get in touch with Mr. Fenwick and his team. Okay. Any other questions, Alex?
There are no more questions, sir. Thank you.
Okay. Just a little, got to pay some bills, just like if I was on the radio and you were listening to WHUR 93.6, right? This is what we also do. So again, I want to thank you for being here. Next month, we will have the Defense Logistics Agency's Small Business Office, their OSDBU, their Director of Small Business Office, because DOD doesn't use that term, OSDBU. The other federal agencies do, but we're all small business professionals seeking to help out small and minority businesses. The Aaron mentioned early in his talk about financial literacy. Yeah. Right. So one of the major things at Treasury, and when you're tracking the SSBCI, it's a $10 billion pot of money that the current president allocated, signed into law and got appropriations to support small, minority, women-owned business and businesses in underserved communities. So Treasury manages that, and but they also know that sometimes, and if you were listening to Aaron just moments ago, he was also talking about financial literacy. If I can't explain to him, talk to my profit and loss statement and how I intend to be able to pay the money back, that's all a part of financial literacy. And one of the things that our agency, the Minority Business Development Agency under Secretary Cravens is doing, we're going to be providing technical assistance across the United States in order to help businesses, and that'll all be free to company owners, presidents, and CEOs to hone your skills on financial literacy and the key things that are needed when you're going seeking money from a lending institution. And we're teaming. It's not just my office. We're actually teaming with resource partners, which includes CDFIs, which includes major banks and other lending institutions to work with us and we get people squared away. Because again, it's not about the money's not there. There is money. I mean, Congress has approved and the president has signed $10 billion just in access to capital to help folks grow and expand their businesses. But you still got to qualify, in order to get that funding. So I want you to stay tuned for that. The MBDA was given $100 million by Treasury. 96 million of that is what they plan to use for what we call the CAP program, which is a capital assistance program in order to provide technical assistance to businesses. And they are reviewing the proposals. Over 1,000 proposals, we're told, that were submitted to do this training that will be awarded to up to 46 organizations, teams to do that work. And we're looking late summer for the announcements to be made, and then folks start across the United States and here in our area in the DMV, providing that technical assistance, again, at no cost to the business. Okay. So stay tuned, and we will continue to try to keep you abreast of working with our partners. And as Aaron mentioned, I mean, we partnered up about a month ago, and so this turned out to be, this is very valuable information today for me, definitely, on some things that as we're consulting with folks. So Aaron, want to thank you for being here on behalf of my president, CEO.
Mr. Marks, I don't mean to interrupt. Please forgive me. Do we have time for one more question?
Yes, I think we'll take that question. We're gonna charge him, but we're gonna take it.
Very good. Thank you, sir.
Okay.
Mr. Fenwick, any suggestions on trying to get funding based on factoring awarded contracts?
Yeah, factoring is a decent option, but with factoring, what you're basically doing is you're signing away the contract. What will happen is they'll sign away the contract to an organization for the term of the contract, and every time you get a receivable or you advance, you're advancing based upon your receivable, and when you get paid, they'll take that money first and then give you whatever's left after they charge their fee. So it takes you from being the person that collects and manages the funding to the person that's just getting the profits and they're managing everything for you. Not a bad scenario, but you have options to do that for yourself as well. The lenders that I work with do something that are called monitoring, and it almost works exactly like borrowing basis. But the big difference is that we're not going to put you on contract for your receivable. Your receivable will go to your account. They will require a large payment for each one, but that's more of a management of the capital, right? If your monthly expenses are, throw a number out there, $100,000, just because it's round, right? $100,000 in monthly expenses, and you're asking the lender to cover those monthly expenses. They'll cover them, but what they want to know is that when that money comes back in for the federal government, you got to give me my money back. And then your line of credit is available to you again. So it's really, you have to use it as a tool. That financial literacy thing that you were speaking about before, these types of products are designed to help you manage your finances until the bank can get comfortable enough with you to say, you know what, we'll give you an open line of credit. You've managed that well. We'll give that line. You've shown now that historically you can afford a line of credit. We'll give that to you now. I also, somewhat on the side, really quickly, there's a lot of money coming out. We talked about that before. It's going to be very different than what it was before, though, right? During the pandemic, you had a lot of PPP, forgivable debt. You had grants all over the place, forgivable, no repayment required. That is not going to be the future that you're going to see over the next 5 years, more than likely. You're going to see a lot of funding that's coming out. It is not going to be in form of forgivable debt. It's going to be in form of lending, and it's going to be specific to certain things. You're going to see funding that's coming out based upon technology. You're going to see green infrastructure, so sustainable and green space. You will continue, I believe, to see products that are focused on reducing wealth gap and equality. But those are the levels, the places where you're going to see a lot of funding come from federal sources, but you won't see as much grants. Most of that debt isn't going to be forgivable. So now's the time to position yourself, get yourself financially literate, get yourself bankable, so that when that funding's coming in a year or 2 years from now, you're ready for it, you're eligible for it, and your business will benefit.
A great point. And this is this is not 1 year money, like this money that the states are getting. This is to be used over the next 5 years. Yeah. Okay. So just understand that. And a couple of things, the smart people that keep me smart. The future webinars will be posted at www.mbda-virginia.com/news/. And if you want to see any of previous webinars that we've had, subscribe to the CRMSDC YouTube channel. Look for Virginia MBDA Business Center playlists, and see all the previous webinars that go back to 2019 and everyone that we did in COVID. Okay. So again, I want to thank you for joining us today. I want to thank Mr. Fenwick much. Appreciate it and taking a bit time out of your busy schedule and sharing with us what's right at our doorstep, especially if I'm working in the district and doing things in the district. Okay. And look forward to our future collaboration.
Thank you for having us on, sir. We appreciate the partnership. We appreciate the work you're doing. Folks on with us, we appreciate the work you are doing. We have an open door policy at DISB. Don't hesitate to reach out.
Thanks very much, team.